Welcome. This is weekly report from Fibo Group. My name is Yuri Tsivosh. This week promises to be less volatile than the previous one, as traders can take a break after last week's high volume of transactions. Last week we had the release of interest rates from the central banks of Australia, Canada, UK and the European Union, which created great volatility in the market. As for future releases, the market will be interested in the output of industrial production from the UK on Tuesday, along with the report on inflation. Also, on the beginning of Thursday, the market will be interested in the output of report on monetary policy of the Reserve Bank of New Zealand, followed by the press conference. During the Asian session, all eyes will be on the release of unemployment rate in Australia, which should cause some action in the Aussie dollar. The end of the week will be the release of retail sales from the United States. Monday's trading may be quite as insignificant statistics hit the market. In the morning, the trade balance will be released in Germany and the consumer price index in Switzerland. This afternoon will show the number of permits for construction in Canada and the report on monetary policy in Japan. Tuesday's promises to be more interesting than Monday, as the market will focus on the British pound. During the morning publication of industrial production, traders will expect a sharp movement in the market. During the past few months, the UK industrial data show diverse dynamic, which put pressure on the pound. Also during the week will be the announcement of interest rates from the Reserve Bank of New Zealand, a report on monetary policy, and of course the press conference. This is sure to create great interest in the New Zealand dollar. It's been a big year for the Kiwi, as there has been a fourfold increase in the interest rates. Since March, the rate rose from 2.75% to 3.5%, which clearly points that the country's economy's recovery. On the downside, the New Zealand currency has suffered against the US dollar, despite the increase in the main rate of the country. And as usual, with us today, Andrew Masters, an investment analyst from Fibo Group. Welcome, Andrew. Could you tell us what is your take on the interest rate in New Zealand?
Thanks. It's good to be here. The Reserve Bank of New Zealand has raised interest rates by 100 basis points since March, taking the key rate to 3.5%, its highest since early 2009. The bank says it sees neutral and comfortable rate levels at 4.5 to 5%, which it expects by late next year or early 2016. At its monthly meeting next week, most analysts, including those surveyed from Fibo Group, expect the central bank to take a break and keep rates on hold at least until December of this year. A number of factors have contributed to this forecast, including a slowdown in jobs growth and a drop in business confidence that suggests inflation will be under control for the foreseeable future. New Zealand food prices declined in July as the food price index fell 0.7% from June, its first decline in 4 months, as discounting led to lower prices for beef and processed meat. Overall, the index was 0.1% lower than July last year, the first annual decline in 14 months. The price of dairy products, which is one of New Zealand's biggest exports, has fallen nearly 45% since its peak in February as inventories increase. New Zealand property values rose at the slowest yearly pace in 14 months in August as restrictions on low equity home loans, rising interest rates, and uncertainty about this month's general election weighed on the housing market. Property values nationwide rose only 6.9% in August from a year earlier. Reserve Bank Governor Graham Wheeler signalled last month he would take a wait-and-see approach to assess how the economy is responding after he raised interest rates 4 times between March and July. The New Zealand dollar has dropped about 5% over the past month to 84 US cents, taking it to the levels last seen before the Reserve Bank began raising interest rates in March. On the positive side, the Kiwi is still a high-yielding currency and an attractive carry trade at 3.5%. With the European Central Bank and even the Bank of Japan planning more monetary spending to kickstart their economies, we could still see traders chasing the high-yielding currency.
Thank you, Andrew. On Wednesday, moving through to Thursday, the Asian session will be interesting with the release of the unemployment rate in Australia. For the last 2 years, unemployment has been steadily climbing, which is a headache for the country's economy and can significantly affect the direction of the Aussie dollar. The Australian dollar has been recently on a downtrend due to a number of fundamental and technical factors. At the end of the trading week, traders will focus on retail sales from the United States, which usually causes extreme volatility in the market. Since the beginning of the year, this number has managed to remain above zero. Such consumer confidence creates good base for supporting the American dollar, and traders will be hoping for a good number. To sum up, we should have an exciting week with traders focusing on important news which is closely connected with the British pound, the Australian and New Zealand dollars. Thank you everyone, have a wonderful and profitable week.